Good morning, everyone. Dan here with tradingology.com in the trading room for the final one in May 27th, 2021. Shout out to my beautiful bride. Today is her birthday, so happy birthday to you, honey. And we'll be bringing Dave on here as well, joining us with the Strong Market team as always to round out the week. Good morning, Dave. Good to see you.
Hey, good morning.
All right, taking a quick look here. We'll just roundabout. Kind of looks like the internals started right where they left off yesterday. Yeah, interesting. It doesn't happen very often where I got both days blended together here where we're just sitting right around positive 1250, kind of upticking on the volume, and day over day here, looking at these, it's like they never closed.
Yeah.
Don't see that very often, so that's an interesting viewpoint there.
And we had a lot of volatility before the open too. I'm just kind of surprised that it didn't move the internals too much, but yeah, I mean the S&P 500, boy, it dropped about 8 or 10 handles, and then it went up 20 handles after the GDP numbers and the unemployment numbers were at 406, and we can get into that stuff. But right now, it looks like everything's pretty strong.
Yeah, it was quite the pre-market move as we see. I got it looked into. You see the pre-markets with the shaded area here. It was pretty mellow overnight, but then it actually started out negative. I thought it was maybe going to be a down day as I was going to bed.
Yeah.
I figured since I took my shorts off and wrapped up my profits yesterday, it was really going to drop today, just to say I was early one more time. But since that's what I'm famous for sometimes, is being a day early before the move happens. But then I woke up and yeah, just really driving here. The tech has just been super volatile. I mean, look at this NQ overnight coming into the rally, just bouncing back and forth.
Yeah.
So we know when we see a lot of volatility in tech, that is a lot of times a sign of things too, of new volatility coming in. Looking at the index, I was noticing too here on the daily chart, it looks like it's kind of running out of steam here. It's kind of running into a ceiling around right where it is right now of 13.7.
Yeah, a lot of movement, but just in a narrow range.
So we'll see, will it break out and actually run back up towards 14,000 again, or is it gonna close back down lower? Because we are seeing the oscillator is to the downside, so that's bearish. But we do have, the bulls are getting in line here. We got 5 columns currently on the daily chart, which hasn't happened in a while on the NDX at least.
Right.
So that's a rare one. So we'll see how they end up. It's looking like a mixed bag there.
We take a look at the Dow. We've got that. We've got a gap down from May 10th. That the big candle that made the reversal day there, and we got that gap the next day. That's around 34,741 on the cash index. So it looks like it may be trying to get up to that point and close that gap.
Yeah, just touched it now, slightly backing off as I zoom that guy in there. Where that gap starts around 34,574, and then we've just rose above. Now it's kind of pulling back a little bit at the moment. So yeah, we'll see if that takes a rally up there. We're up 187 right now in the cash index. NDX is up 13. SPY's up 14 points. So they're all, well, the Dow is definitely the leader, but they're all slightly positive right now.
They're all happy, yeah.
Well, they're getting set up for, we have a long weekend coming. Monday is a holiday.
Yes. So we got the seasonality. A lot of times the market will go up just based on a holiday.
Right. And Monday we did have a holiday in Canada, so there was less thinner trading too. Now I think it was happy on Monday too, if I go backwards. Yeah, Monday was that first. I'll pull this one back over. Here was Monday. Tuesday, Wednesday were the red days. Now Thursday's green again. So across the board, that was kind of the story. Except for tech was green yesterday. That's the only difference. I know we talk about the SPY-VIX indicator quite a bit, and I was looking at this a little bit closer, and I want to bring this back to your attention and everybody else's. And I'll zoom this one in. This one I have on a weekly chart, and we'll see where tomorrow finishes. I'm very interested in this because we've been talking about this 25 level, which we've touched 2 times. And look, we're actually at it right now, literally at 25. It just changed. And this being a weekly chart, so this is the 3rd time, if this closes at 25, that we've touched there. And the last time before the pandemic struck, we had the warnings with this indicator where it touched it and actually went above it slightly of 25.8. Here, came back down, touched it again, came back down, broke way through up to 27.
Yeah.
It
Wow.
came back
Yeah.
down, and the fourth touch was right before it dropped.
Hmm.
So if nothing's ever 100% repeating, but as many people say, it often rhymes. If we do something similar, where if we look back at the previous one as well, there was 1, 2, 3 touches right below it, 24,999. Doesn't get much closer than that. 24.3, very close. So 3 touches back here. We had 1 close touch here. We had a slight pullback. We had 2 close touches. Then we had a pullback. So that was in August. And then it was down below us. And then it was the 4 times. So if we see this pattern repeating again, we're on the 3rd touch right now.
Right.
So will we see a pullback in a 4th, or is this 3rd touch going to be the trigger? I just say be prepared, because both could happen, or maybe we'll be the first time we go to 5. We haven't seen a 5 touch, but I just wanted to make sure I get everyone aware of that. And that warning indicator is ringing again right now at 25, literally right now, breaking with the SPY going up and the VIX going down.
And you're on a weekly chart there, so those are long-term signals.
And I drew in a little trend line at the bottom here where we could see it bounce down to previous time. So that's always a good idea, where we track that as well. So we still have this divergence happening where we have a lower high, but this is higher. We haven't broke that one. So this warning is still on. I mean, maybe this was just a precursor after 2 touches, and we'll see what happens after 3 or potentially 4.
Yeah, that's the most important long-term indicator I look at.
So don't say you weren't warned, is all I can say. Is this is a very good forward-looking indicator. And then down to the other, obviously, internals, we see that. So market internals is what it's all about.
The market doesn't like that when the ratio of the SPY to the VIX gets stretched to a certain level. So on the downside, if it goes below 10, goes down to 2, 3, 4, 5, that's a great buying opportunity long term. If it's above 25 or 25, near 25 or higher, that's kind of a short-term sell. That's a long-term sell signal, or at the very least, it indicates some weakness coming.
So have your radars on for that. Pay attention. And as you mentioned earlier, we'll take a look at our few of the news headlines, what's going on this Thursday. So we got our unemployment claims. 427 was the forecast, and we came in below it at a 406. So they're happy once again. So Bloomberg headlines, jobless claims fall to 406, lowest in to a fresh pandemic low.
Yeah, the trend is down.
So they're happy about that. And the Dow's jumping better than expected. Boeing shares are jumping. So I think they're trying to fly the 737 MAX again. It may have got grounded again, but I know that's kind of back and forth. So Boeing's seeing some volatility, which is helping move the Dow.
Yeah. And as far as the unemployment goes, 13 states have already started canceling their extended unemployment benefits.
Yeah, that's going to be a big deal.
But the extended are going to be canceled in 13 states so far.
I heard a few people saying instead of just paying people to stay home, why don't they give that extra bonus money to people that go to work?
They had actually talked about that a little bit, maybe half as much as a little bonus for going back to work. So instead of 300, you get 150 a week to go back to work. Yeah,
they want to see unemployment go back down to close to 0. Let's just do that, and they'll see people taking these open vacancies left and right. Because that's, there's help wanted signs everywhere, right? People have been talking about that for quite a while now.
Yeah, especially in the food service industry.
Right. Yeah, as they're just getting opened back up. So while I'm there, I might as well pull over and take a look at how's our crypto friends doing. Looks like they got Bitcoin's a little happy right now. It's hovering right around 40,000, which is near that 618 down retracement. Again, just to remind you, we have not broken the 46 up, so it is still in a downtrend. Just takes a while to get there if it's moving. XRP's hovering around $1. Ethereum's right around 2,800. Just looking to try and see if it can touch 3,000. We'll see if it gets there today. And VET trying to make a little comeback back up to 13 after it fell down to 6 cents.
Yeah, that was a pretty sharp drop there. Wow, yeah, it was a much larger pullback than I had anticipated. I thought 10 would be a good floor for it, but broke right through.
Yeah, as we see if this downward trend continues here, this could be a 382 retracement, then it might go down to 4. We'll see.
Or 2 cents would be what's that? 27.
Oh, sorry, that's -4.
That's
Go to
negative. Yeah, you
-4.
can't get. It's not like crude oil. It can't go negative.
Well, how can you say that, Dave? Maybe they'll find a way.
Maybe.
I saw someone.
Are there carrying charges for vet?
I saw someone predicting that the 10-year is going to be negative in like a year.
It's up today. It's up 2%.
I haven't pulled up my. Let me pull up the yields here.
I don't know. They're happy.
Well, it's got some room. It's well below our recent trend line, and it hasn't broken through. So yeah, it might be going back up to 169 area.
Yeah, either that or this is just a little retracement after bouncing off of that resistance line.
Yeah.
So yeah, we could see. I think we're going to see lower interest rates again. I think people still, in order for the economy to really get moving, it's all about the consumer. And the way for the past 25, 30 years, the only way the economy has really surged forward is by people borrowing. So they borrow to buy a boat, they borrow to buy another house, they put stuff on their credit cards, that spurs the economy and the economic growth. If they don't do that, if they don't borrow money and they're just taking it out of their savings or something like that, then there's no incentive. I mean, there's no real economic growth, going forward. So, in order to keep the economy at a really high level, they need to come out and start spending money like crazy.
Well, that's what they're not happy because it's like record saving times recently, actually, isn't it? Where they're seeing more money's being saved.
That's right.
So that's what they're fighting right now.
Yeah. Yeah. So the Fed has to spur and borrowing money, and the only way they're going to spur borrowing money to get the economy back to zero, unemployment and stability of prices is by lowering interest rates. And the only way to do that is through their bond repurchase programs and their reverse repos, which you talked about recently. The reverse repos are going crazy.
Yeah, it's been a record first 2 weeks in May. Let me pull up that site where they report them. And I've seen it's getting more and more visibility. So I'm glad to see that more people are talking about that. I think I had actually tagged Jeff Snyder, and he's done a ton of work on it recently. So thank you, Jeff, if you happen to see this at any time, because he does a ton of research, and he's done. Follow him on Twitter to follow his. And last night, 450 billion.
Whoa.
I'll zoom that in because that's really small text.
Wow, wasn't it 380 last time we talked? I think you said it was around 380, so it's jumped up another.
The day before, 432. I mean, yeah.
I mean, wow.
It was like 1.5 trillion, I think, or I forget the math. It was like over $1 trillion in the first 2 weeks, and now they're sitting at 450 billion a night. This is each night. Each day I'm scrolling here. So this was Friday, 369. So this is the regular repo, where it was them inserting for the bank operations to have liquidity. Reverse repo is where you have to listen to Jeff because he explains it way better than I ever can. And 350 billion there. So yeah, it's just daily. 300.
So it's been going up. It's almost doubled that from that.
Yeah, we're rising. They're squeezing. They're really pulling the trigger.
Wow.
Talk about flexing their muscle and their tools that they can use. This is the one they're using.
Yeah. Wow. That's quite the increase.
I'm waiting for when this stops reporting and they say this is no longer available because we don't want you to know. Yeah. We'll see when this website goes away. That's when the alarm goes off, when I can't get to here anymore.
Yeah.
Just like they stopped reporting on some of the Fred charts. This chart will no longer be updated. Why is that, Fred? You don't want us to know something?
Well, did you hear Biden this morning?
I did not. What do we got now?
Well, he wants to increase spending for infrastructure on an annual basis, starting with $6 trillion next year for infrastructure, going to $8 trillion by 2030 per year. Per year.
Yeah, didn't we joke about a $10 trillion balance sheet and all that's going to be, we're going to blow right through that.
Oh, we're going to blow. I mean, hey, look, they're digging a hole, they're digging a hole, they're digging a hole, and they just keep digging in that same hole because, you know, what else are they going to do? It's too late to kind of go back and start to be solvent again, or, you know, to zero out the national debt. I mean, that's way off the radar.
Yeah, the only things I'd seen recently was, you know, it first came out with, what was it, 2.5 trillion or whatever it was, 3 or 4. Then it was, now it's 2, now it's 1.5. So I saw they were trying to find that in between space, right? Of where can this next infrastructure bill? So this one about annual one is really interesting. Well, if you won't give me it all at once, I'll just I'll go bigger. I'll put together an annual plan.
Yeah, and they're going to raise taxes to do it. They said that, you know, some of the spending is going to be paid for by taxes, increase in tax rates. I don't know what else he's got planned, but I mean, that's a heck of a lot of spending on an annual basis from 2022 to 2032. He had a 10-year plan. So that's I mean, that's huge.
Yeah, here's one of the headlines I see where he's countering with the 928 volts. Stop.
Yeah, this is actually just this is the beginning of, and I think it has something to do with the maybe I'm wrong here, but this is kind of
Oh, this is the Republicans' counter to Biden's sweeping infrastructure proposal. So this is the side.
Yeah, and this is post-pandemic stuff. So there's I think there's still some stuff in there about, you know, rebuilding post-pandemic. So this is not as big plan. There's another. He announced the long-term plan. And I'm surprised they don't have a bigger headline for that.
We'll find that guy and I'll pop up for you guys later on. But that's wild.
Yeah, it's just it's insanity. I think. Yeah, boy, I tell you, if it, you know, I mean, the last time the U.S. budget was actually balanced was pre-Clinton.
Yeah, there was that very short time that it was positive. And I forget, there was some other storyline that went along with it, but I'm not recalling off the top of my head right now, where it was, yeah, that was great, but this is part of the reason why. But yeah, since then it's been nothing but a train wreck.
Yeah, well, a lot of that has to do with the fact that we're the reserve currency. The U.S. dollar is still the reserve currency, so you always have you run a deficit when that happens. You know, it would be fun. Have you got the debt clock there?
I can pull it up.
Yeah, that should be interesting, huh?
The gears might have came out of it.
They probably don't have enough space on a page to put all the numbers. The numbers are getting so big.
Yeah, we're gonna need a magnifying glass because the font's gonna be tiny.
Yeah.
Here we go. We'll pull up the U.S. debt clock. There's a world debt clock too, isn't there? It's just U.S. U.S. is fine.
Yeah, world, U.S. Whatever. I think it's world.
There we go. Here's
there we go. U.S. debt clock. Okay.
28. Let's see.
Well, I look at the debt per taxpayer. I mean, that was maybe around 50,000 pre-pandemic.
Now it's 2.25, 225.
Yeah.
Debt per citizen, 85,000.
Debt per citizen, 85,000. Debt per taxpayer, 225. The one I was looking at was debt per taxpayer mostly. See, as the number of taxpayers go down and the more stimulus is introduced, more debt, the higher that number goes. It's almost exponential.
Debt to GDP ratio is 143%.
Yeah, we broke that 100% level quite a while ago. We're coming up on Japanese levels, I think, here.
Yeah, we'll go back to where's the world? Let's check how are we compared to the world. Well, we're still number 1.
Yeah. Japan, We've actually, yeah, it looks, we're double Japan. Jeez. Of course, we're a much larger economy, but they're, yeah, look at their debt to GDP ratio, 273.
Right. Well, we'll get there. UK's at 111. Greece, maybe we'll set our sights on Greece. We know what happened over there.
Oh yeah.
They're sitting at they're only at a half a trillion, so that's nothing.
Yeah. They're in good shape compared to us right now.
Right. Switzerland, surprised they're not lower. That's a fun one. There's some, what's our gold ratios in here? Paper to gold, paper to silver. Where's our dollar to gold? Is at 33,000.
Wow.
Dollar to silver is at 4,700.
Wow.
Whew. Wonder how they measure the dollar to crypto. What does it say? Total M2 money supply divided by the total market cap. Okay, gotcha. So they use the market cap for that one. So that's actually when, so the ratio of 2013, which obviously we know there wasn't much market cap. So look at that, 9,200 down to 8.
Wow, that's weird. That's very strange because crypto's gone up, I thought. So it's like,
But yeah, so the market cap, that's how much it's went up compared to the dollar.
yeah, the market cap has gone up tremendously.
Savings per family is green and 36. This is always going to, we could spend a lot of time on here and it's just an eye chart for you guys, so I won't bluster you too long, but we got to, how's our state one? Where's your New York friends doing?
I don't know. Go down to the unfunded liabilities because I always like to watch that one.
Where do they hide that one?
And way down at the bottom to the right. So they have.
Oh, here we go.
So we've got national assets at 162. We got unfunded liabilities at 148.
But that's looks like more commas. That's trillion. That's 148 trillion.
Trillion, yeah.
They're going to need another number or another comma there soon because they'll make that a quadrillion soon.
Yeah, I think so. Yeah. It's just, yeah, it's liability per citizen is 444,000.
Whew. Social Security liability, 21 trillion. That's just another account though, right? That's all, you know, it doesn't matter if the whole government's negative, so can Social Security, you know. That's one thing that everyone's always talked about, worried, you know, it's going to be insolvent. Well, it's been insolvent for years. So at this point, you'd have to ask, what's the difference? Who cares if it's negative? They just run it up more negative. You know, who's going to call them to the carpet? Nobody. It's not like a regular business that runs a negative thing and they fold up shop. That's the problem with market manipulation when you don't let it recover.
Well, see, that's what a lot of companies are doing. They're actually taking their playbook from the U.S. government. So whenever the government needs money, all they do is float a bond. Well, companies are basically doing the same thing. GameStop, which has been going up lately, is doing the exact same thing. They're actually issuing more shares, and they've issued some corporate bonds in order to generate some cash for the business. So they're taking their playbook from the government.
Yep.
You know, individuals, they can't. You know, we can't. You know, we can't float a bond. You know, it's like, hey, can I borrow? Here's a $100,000 in debt so I can pay off some of my loans or whatever I have to do. But there's no market for it, you know.
Well, I got my fancy printer. I'll make this piece of paper look really cool. If you want to put 100,000 in my account, I'll be very.
Yeah, take that to the bank.
Yeah. Funny how that's how funny it sounds, but that's literally what happens.
It's literally what the corporations are doing and the government's doing. They don't have the money, but they're going to keep floating out those debt instruments in order to generate the cash they need to just operate.
Well, as we get close to our top here, we do see some fragility happening, which we know the market is kind of like we're walking on a, I'll call it a thawing lake that might have some cracks in the ice. And we see some big plunges suddenly happening once again. So the NQ is now negative on the tech side. So maybe to run into that ceiling that we were just talking about. Short term, we're looking down right now. And not that it went to zero, but whenever we see bigger movements in the internals, those lead to interesting things to happen. Big separation here. Getting a little bit tighter on the downside. That's interesting. So the positive, we got separation. The negative is closer. So I would trust the downside more than the upside right now. And the SPY-VIX is turning red. That's Dave's good indicator too. Selling is coming in. So watch out, gentlemen and ladies that are trading. Be careful. Any final thoughts for as we wrap up May?
Absolutely. I think we're kind of like in this, there's a lot of zombie companies out there. And I think we're, as a nation, we're becoming a zombie nation. A lot of debt, not enough income, and not enough productivity. So as long as the government continues to spend, everybody's going to have a feeling of elation for a little while. How long that's going to last, I don't know. But at some point, it may not be. The way they're doing it now, it may not even be our generation. But I think that in the long run, we're going to be in some serious trouble. I think Powell is right, though. I think the inflation is transitory. We've seen pullback in most of the commodities. I'm waiting for one final pullback in commodities before I go all in on that. So USCI pulled back a little bit. We saw wheat, Joe, the ones that we've been watching here, land, FPI, all of the commodity plays, seed, corn, cane, kind of pull back a little bit. And we'll see what happens, see if we go down to possibly a lower level. And at that point, we're going to go, the dollar should rise pretty steadily. And when that's done, we're going to have a huge inflation problem. That's going to be the money maker. That's going to be a big money maker for a lot of people. If you're in commodities, when that inflation hits, you're going to do very, very well. It's not yet, though. I don't think we're there yet.
Excellent. As always, we appreciate your insights, and I appreciate you sharing your time. If anyone has any questions, they can always email us at either support@tradingology.com, or you can get a hold of Dave's team at support@strongmarket.com. They'll be happy to help you out. We have more people on those email teams, so answering your questions as they come in. Please be patient, as there is many emails that do come, so they do take some time to work through those. And one final note I should say, the sale that we had for May in Tradingology is there is a few days left at 50% off. We have had a few members reach out, so grab that before it goes away. Still a great deal to get all the tools, all the courses for 50% off the entire elite membership. So questions on that, shoot us an email as well. So with that, we'll probably wrap her up, Dave, and we'll see you guys back in what's after May? June? I can't believe May's done already.
Yeah, next Tuesday. Next Tuesday is June 1st. So markets closed on Monday, everybody. Remember that. And we will see you Tuesday.
Sounds good. Thanks, Dave.
Yeah. Have a great weekend, everybody. Bye.
Bye-bye.